Welcome back, everyone. Today, we're sinking our teeth into the latest financial report from a giant in the Indian steel industry, JSW Steel Limited. This is a big one, so let's get straight into it.
Absolutely. JSW, for those who might not know, is the flagship company of the diversified $24 billion JSW Group. They are a major player in steel manufacturing, not just in India, but with a global presence too. We're looking at a company that's deeply integrated into infrastructure, automotive, and many other critical sectors.
And it looks like we have quite a bit of information to go through. They've released their audited standalone and consolidated financial results for the quarter and financial year ended March 31, 2025. The Board of Directors approved these results in their meeting held on May 23, 2025. So, we'll be looking at both the standalone performance of JSW Steel Limited itself and the overall consolidated picture, which includes its subsidiaries.
That's right. And just to set the stage, that board meeting on May 23, 2025 commenced at 10 a.m. and concluded at 3:40 p.m. So a good chunk of discussion there.
Haha, I can imagine. All right, let's kick things off with the headline numbers. Can you walk us through the key financials, starting with the consolidated results for the fourth quarter of FY25? How did their revenue from operations look?
Okay, for the consolidated entity in Q4 FY25, revenue from operations stood at 44,819 crore rupees. Now, comparing this year over year, it's a slight dip of about 3.1% from the 46,269 crore rupees they reported in Q4 FY24.
A small dip year over year. And what about quarter over quarter compared to Q3 FY25?
Quarter over quarter, there's actually a decent uptick. Revenue grew by about 8.3% from 41,378 crore rupees in Q3 FY25. So sequential improvement there.
Interesting. Now, let's talk about a key profitability metric, EBITDA, or earnings before interest, taxes, depreciation, and amortization. What are the consolidated EBITDA figures for Q4?
For Q4 FY25, the consolidated operating EBITDA was 6,378 crore rupees. Year over year, that's up by about 4.2% from 6,124 crore rupees in Q4 FY24.
An increase in EBITDA despite a slight dip in revenue year over year. That's noteworthy. How does that compare quarter over quarter?
Sequentially, the EBITDA saw a strong jump of 14.3% from 5,579 crore rupees in Q3 FY25. The press release mentions this was driven by higher sales volumes and lower coking costs.
Okay, good context. Let's move down the income statement to profit before tax, or PBT, on the consolidated side for the quarter.
The consolidated PBT for Q4 FY25 was 1,730 crore rupees. This is down about 14% year over year from 2,012 crore rupees in Q4 FY24. However, quarter over quarter, it's a significant improvement, up nearly 47% from 1,178 crore rupees in Q3 FY25.
Quite a swing there between the year over year and quarter over PBT. What about the bottom line, profit after tax or PAT for the consolidated entity?
Consolidated PAT for Q4 FY25 came in at 1,501 crore rupees. This is up 13.5% year over year from 1,322 crore rupees. And quarter over quarter, it's a massive jump of over 108% from 719 crore rupees in Q3.
Wow, that's a substantial quarter-over-quarter PAT increase. And how did this translate to earnings per share or EPS for the quarter on a consolidated basis?
The consolidated basic EPS for Q4 FY25 was 6.15 rupees. That's up about 15.4% year over year from 5.33 rupees. And sequentially, it's up over 109% from 2.94 rupees in Q3.
So a strong quarter sequentially for the consolidated entity. Now let's shift gears and look at the full financial year FY25 for the consolidated results. How did revenue, EBITDA, PBT and PAT stack up for the full year?
For the full financial year FY25, consolidated revenue from operations was 1,68,824 crore rupees. This is down about 3.5% compared to 1,75,006 crore rupees in FY24. Consolidated operating EBITDA for FY25 stood at 22,904 crore rupees, which is a decrease of about 18.8% from 28,236 crore rupees in FY24. PBT for FY25 was 5,077 crore rupees, a significant drop from 13,380 crore rupees in FY24. And finally, PAT for FY25 was 3,491 crore rupees, down from 8,973 crore rupees in the previous financial year. The basic EPS for FY25 was 14.36 rupees compared to 36.34 rupees in FY24.
So, the annual consolidated picture shows a decline across revenue and profitability metrics compared to FY24, which contrasts with the strong sequential performance we saw in Q4. That's an important distinction. Now, let's turn our attention to the standalone results for JSW Steel Limited for Q4 FY25. What was the revenue from operations there?
For the standalone entity, in Q4 FY25, revenue from operations was 32,471 crore rupees. Year over year, this was down about 8.1% from 35,341 crore rupees in Q4 FY24.
And quarter over quarter for standalone revenue?
Quarter over quarter, standalone revenue saw a modest increase of about 2.1% from 31,799 crore rupees in Q3 FY25.
Okay, what about standalone EBITDA for Q4?
The standalone operating EBITDA for Q4 FY25 was 5,068 crore rupees. This is up a healthy 14.1% year over year from 4,442 crore rupees. Sequentially, it's up 15.3% from 4,397 crore rupees in Q3.
So, standalone EBITDA showing strength both year over year and quarter over quarter. How did the standalone PBT and PAT look for the quarter?
Standalone PBT for Q4 FY25 was 1,702 crore rupees. That's up 4.8% year over year from 1,624 crore rupees. Quarter over quarter, it increased by 3.9% from 1,638 crore rupees. The standalone PAT for Q4 FY25 was quite strong at 2,047 crore rupees. That's more than double, up 103% from 1,007 crore rupees in Q4 FY24, and quarter over quarter, it's up 59% from 1,286 crore rupees.
Another strong PAT performance on the standalone side, especially year over year. What was the standalone EPS for Q4?
The standalone basic EPS for Q4 FY25 was 8.39 rupees. This mirrors the PAT trend, up 103% year over year from 4.13 rupees and up 59% quarter over quarter from 5.27 rupees.
And for the full financial year FY25 on a standalone basis?
For the full year FY25, standalone revenue from operations was 1,27,702 crore rupees, down 5.5% from FY24. Standalone operating EBITDA for FY25 was 18,381 crore rupees, down 16.4% from the previous year. Standalone PBT for FY25 was 6,543 crore rupees, down significantly from 12,102 crore rupees in FY24. And standalone PAT for FY25 was 5,837 crore rupees compared to 8,041 crore rupees in FY24. The basic EPS for the full year was 23.94 rupees, down from 33.16 rupees.
So, similar to the consolidated side, the annual standalone performance is down compared to the previous year, despite a strong Q4. Any significant other income we should be aware of for either standalone or consolidated?
Yes, for consolidated Q4 FY25, other income was 230 crore rupees, and for the full year FY25, it was 694 crore rupees. On the standalone side, for Q4, other income was 578 crore rupees, and for the full year, it was 1,865 crore rupees. These are notable amounts, and for a deeper dive, one would need to look into their composition.
Right. Now moving to profitability insights. You mentioned the operating EBITDA. What do the margins look like for Q4 FY25?
For Q4 FY25, the consolidated operating EBITDA margin was about 14.2%. This is an improvement from 13.2% in Q4 FY24 and 13.5% in Q3 FY25. On the standalone side, the operating EBITDA margin for Q4 FY25 was even stronger at 15.6%, up from 12.6% in Q4 FY24 and 13.8% in Q3 FY25.
So, margin expansion both year over year and quarter over quarter, with standalone margins looking a bit healthier than consolidated in Q4. What about exceptional items? Were there any significant ones in Q4 or for the full year?
Yes, there were. For the consolidated Q4 FY25, there was an exceptional loss of 44 crore rupees, primarily due to stamp duty on the slump sale of the Salav DRI unit. For the full year FY25, the consolidated exceptional loss was 489 crore rupees, which also included items like the Banai coal block write-off and a provision for the Jajang iron ore mine surrender. On the standalone side, Q4 FY25 saw an exceptional gain of 859 crore rupees. This is a net figure. The notes detail that this includes a gain on the sale of the Salav unit amounting to 1,449 crore rupees and a gain from the buyback of shares by Piombino Steel Limited, a subsidiary, of 1,454 crore rupees. However, there were also significant negative exceptional items contributing to the full year's net exceptional loss of 1,304 crore rupees, such as an impairment provision of 3,762 crore rupees towards loans to subsidiaries in the US and Mauritius, the Banai coal block write-off of 103 crore rupees, and the Jajang mine provision of 342 crore rupees.
Quite a few moving parts in those exceptional items, especially on the standalone side for the full year. Let's touch upon the balance sheet. Any key insights there? What about debt levels?
Okay, looking at the consolidated balance sheet as of March 31st, 2025, total equity stood at 81,666 crore rupees. Net debt was 76,563 crore rupees. This gives a net debt to equity ratio of 0.94 times, which is within their target range. The net debt to EBITDA ratio was 3.34 times. For the standalone entity, total equity was 79,839 crore rupees as of March 31st, 2025.
And cash flow? What did that look like for FY25? And any news on dividends?
For the full year FY25, on a consolidated basis, net cash generated from operating activities was strong at 20,899 crore rupees. Net cash used in investing activities was 16,997 crore rupees, largely due to capex. Net cash used in financing activities was 262 crore rupees. On the standalone side, for FY25, net cash from operating activities was 16,891 crore rupees. Net cash used in investing activities was 9,979 crore rupees. And net cash used in financing activities was 2,270 crore rupees. And yes, good news for shareholders. The board has recommended a dividend of 2.80 rupees per equity share of 1 rupee each for the year ended March 31st, 2025. This is, of course, subject to shareholder approval at the AGM.
Good to hear about the dividend.
Now, usually, we dive into segment performance, but JSW Steel has a specific note on this, right?
That's correct. Both the standalone and consolidated notes to accounts, Note 5 on page 11 of standalone and Note 7 on page 28 of consolidated, state that the company/group is primarily in the business of manufacturing steel products and hence has only one reportable operating segment, as per Ind IS 108. So, that simplifies this part of our analysis considerably.
Indeed, it does. So, let's move to a broader performance analysis. We've seen some contrasting trends, a strong Q4 sequentially, but a weaker full year FY25 compared to FY24. What factors are at play here?
The press release and investor presentation shed some light on this. The strong Q4 performance, especially sequentially, was driven by higher sales volumes. In fact, JSW Steel reported its highest ever quarterly consolidated crude steel production and sales in Q4 FY25. Lower coking coal costs also helped operating EBITDA in Q4. For the full year FY25, while they did achieve their highest ever annual crude steel production and sales, the overall decline in profitability compared to FY24 can be attributed to factors like lower steel prices for a part of the year and those significant exceptional impairment provisions we discussed earlier, particularly on the standalone side, impacting the consolidated numbers too.
Right. Now, this is a critical part. Significant notes from the report and any major events. We've touched on a few, but the big one seems to be related to Bhushan Power and Steel Limited, or BPSL.
Yes, this is extremely significant. Note 2 in both the standalone and consolidated financials discusses the Supreme Court's judgment dated May 2, 2025, which rejected JSW Steel's resolution plan for BPSL. The court directed a refund of amounts JSW Steel had paid to BPSL's creditors and the equity contribution it made. It also directed liquidation proceedings for BPSL. Now, JSW's management states that on the standalone side, its investment in and loans to Piombino Steel Limited, which in turn invested in BPSL, aggregates to 9,215 crore rupees. They've done a recoverability assessment and believe this amount is sufficiently covered and no provision is required. On the consolidated side, JSW Steel had been consolidating BPSL, and the carrying amount of BPSL's net assets in the consolidated financials as of March 31, 2025 was 14,091 crore rupees. Again, management believes this is recoverable. In both cases, JSW states they are, in consultation with legal advisors, evaluating all options to finalize legal remedies, including a review of the Supreme Court judgment, and believe there's no adverse material impact.
That sounds like a very complex and uncertain situation. And this directly leads us to the auditor's report. What did SRBC and Company LLP have to say about both standalone and consolidated financials?
This is where it gets very serious. For both the standalone and the consolidated financial results, SRBC and Company LLP have issued a qualified opinion. The basis for this qualification in both reports is precisely the BPSL matter we just discussed. The auditors state, pending the outcomes of the legal remedies being evaluated by the company, as stated in the said note, and the final outcome of regulatory actions, and given the uncertainties involved in this regard, we are unable to assess the possible consequential effects thereof on the standalone/consolidated financial results.
So, a qualified opinion from the auditors. Can you explain what that means for investors?
A qualified opinion means that except for the specific matter they've highlighted, the BPSL uncertainty, the financial statements present a true and fair view. However, that except for is a major caveat. The auditors are essentially saying they cannot get sufficient appropriate audit evidence to conclude on the potential impact of the BPSL judgment on the financial statements. The Statement on Impact of Audit Qualifications provided by JSW Steel Management, page 12 for standalone, page 29 for consolidated, states their belief that no adjustments are needed due to the BPSL issue. However, the auditors are clearly not in a position to agree with that assessment due to the prevailing uncertainties. This creates a significant risk and uncertainty over the reported numbers, particularly concerning assets and investments related to BPSL.
This BPSL issue and the auditor's qualification are definitely the biggest takeaways. What about the outlook for JSW Steel and what are the key risks considering all this?
Well, operationally, the company has shown resilience, especially in Q4. Their investor presentation provides guidance for FY26, with consolidated crude steel production targeted at 30.5 million tons and sales at 29.2 million tons, indicating further volume growth. The press release also provides a generally positive outlook for the Indian steel demand, driven by government capex. However, the primary risk is undoubtedly the BPSL situation and the uncertainty surrounding the recoverability of significant investments and assets. The auditor's qualification underscores this. Other risks include volatility in global steel prices, input costs like coking coal and iron ore, and broader geopolitical and economic factors. And as always, this discussion is for informational purposes only and should not be considered investment advice. Investors should consult with certified financial experts before making any investment decisions.
A very crucial disclaimer. So, to conclude our discussion on JSW Steel's FY25 results,
JSW Steel has demonstrated strong operational performance in terms of production and sales volumes, particularly in Q4 FY25. Profitability also saw a good sequential uptick in Q4. The dividend recommendation is positive for shareholders. However, the full-year FY25 financial performance was weaker than FY24. The elephant in the room is the BPSL Supreme Court judgment and the subsequent qualified opinion from the auditors on both standalone and consolidated financials. This introduces a very high degree of uncertainty regarding a significant portion of their investments and consolidated net assets. While management is confident about the recoverability and is pursuing legal remedies, the auditor's inability to assess the impact is a major red flag. Investors will need to monitor developments on the BPSL front very closely.
an excellent summary. It's clear that while JSW Steel's core operations are chugging along, this BPSL cloud and the auditor's stats are critical factors for anyone looking at the company. Thanks for breaking it all down for us.
My pleasure. Always a lot to unpack with these large entities.
And to our listeners, if you found this deep dive helpful, please remember to like, share, and subscribe for more financial insights. We'll catch you on the next one.